Funding for Market Journal is provided by the Nebraska Corn Board.
When we transform Nebraska corn into ethanol, it doesn't disappear from the food supply. It just takes a little detour. Ethanol is made from the starch. The rest of the corn becomes livestock feed to create meat and dairy products, corn oil, sweetener, and other food ingredients, and maybe a little carbon dioxide to make your soft drinks fizzy. Homegrown ethanol helps satisfy America's hunger for energy and the world's appetite for feed and food. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Mike Briggs looks at profit margins in the feedlot. Daran Rudnick describes a unique farm management competition. Tina Barrett explains the elimination of Section 1031 exchanges for personal property. And Berger talks about breeding expenses in the cow herd. Mike Briggs is our market analyst this week. 2017 may end up being the best year ever for U.S. beef and veal exports. Data released Monday shows through the first 11 months of 2017, shipments had surpassed every yearly total except 2011. The strong pace was led by Japan, which will have its best year since 2003. Additional demand has also come from China. Since reopening its market to American beef, China has imported almost $23 million worth of U.S. product. More than half of that has come from Nebraska. Meanwhile, futures prices slumped into the start of this week. The February 2018 live cattle contract closed Monday $14.52 off November's high. We talked with Mike Wednesday morning about beef demand, meat production, and the dip in market prices.
Well, it's been a really unfortunate situation because 3 times in the last 6 weeks we've had the packer in the corner on a Friday or a Thursday or a Friday afternoon, and the board bails them out every time, and it's all fund selling, and that's a pretty big flashpoint for me because it just drives me nuts that the CME lets these positions get so big on these funds that when they decide it's time to go, they move the market in whatever direction they want it to go in. And it's really frustrating because what's going on the board seemingly has nothing to do with fundamentals, because from a fundamental standpoint, we're good. Our weights are below last year. Our marketings are over 100 in every cattle and feed report. We're marketing cattle right along. There's not a whole lot of market-ready cattle now. And then the board drops $14, and everybody's like, well, why? Because cash has not changed very much. Cash has varied between 120 and 123 maybe, and you have a $14 break in the board. What's that telling you? They're not matching up, and that always drives me nuts because the board has to be a risk management tool for those of us that are actually in the industry, not a roulette wheel for commodity funds.
The last time we were here, we were talking about high placements in October then, and you thought, as long as demand kept up, you thought we could keep chewing through the supply. So tell me how demand has kept up.
Demand has kept up very well. Exports are excellent. The prices in the stores are so much better than they were last year, and people feel better, and people have a little more money in their pocket because the economy is doing well, and demand for beef is excellent. We just, as an industry, we need to not let our weights get out of control, and we've kind of done that here a little bit. Now we have these storms, and that may all go away really fast. But we need to be careful not to overfeed our cattle and put too much extra tonnage on there because we are killing extra animals.
Is there a place where, or a time when placements start to lower back down off of high levels that they've been at?
I don't know because there's so many outside influences to that. One of them right now is Mother Nature. You have a horrible drought, Montana and the Dakotas, and now down in the wheat pasture areas where a lot of these cattle that would typically go to wheat or are actually already on wheat, there's no wheat. So they're coming into the feed yards, and there's just nothing we can do about that. I think that causes us a problem down the road because I think we're going to overload the system with beef sometime this summer.
Well, let's talk about that. Until you get to grilling season with more pork and beef and chicken here in the first half of the year, how do you remain a competitive alternative?
It's a great question. Now, it was pretty highly promoted how we were going to have beef tonnage drop the first quarter. And it kind of seems like maybe that's right because there doesn't seem to be a lot of market-ready cattle. I think we're going to be okay into April, maybe in the first part of May, but then I'm afraid our beef tonnage is going to catch up with us and we're going to have a problem. But we kind of have control of this deal a little bit ourselves. We just need to keep marketing cattle right along. But I really wish we could do it at a more, what I perceive as fair price, because the Packers really getting away with it right now.
Where do you think the fair price is?
You know, that's tough to say, but we're trading cattle here. We've been trading cattle in this 120 to 122, 123 deal for quite a while. I think we should be more in the 123, 127 camp, because the Packer is just making huge margins. He doesn't need to keep all that, you know, need to share a little bit. But what's going on with the commodity funds, everybody looks at that futures board and that kind of fortifies or takes away your attitude every day. You know, if the board's up, you feel pretty rock solid, and then when the board's down, your dauber's kind of down. And it makes it really hard for us to market cattle the way I guess I feel we should.
What have margins been like?
You know, they've been okay up until maybe like now, because they're probably still okay. There's probably a little red ink out there, but I think there's probably more of black ink, so it's not bad. But we're not making the kind of money we should make, and the Packers just ripping it in with both hands, and that's a little frustrating.
Are people eager to place?
That's a good question. Can you buy value in feeder cattle right now? No, you cannot, because everybody's anticipating the downfall of this market, and you've got that summer market a good $10 behind where it is now, 8 to 10 bucks behind where it is now. So a lot of that's getting built in, but that's really hard if you have a discount futures market trying to buy feeder cattle. So it's really hard. There's not a lot of value. But having said that, because of the drought conditions and also the fact of cheap corn, you're having a lot of pressure to put cattle in the yard, and that's what's happening.
You hinted at this a little bit more, but tell me about the performance here in the feedlot. When there was a little rise, people thought it was the bad weather and people couldn't get to the sale barn and not put pounds on animals.
Performance in the feed yard has been great. I've told a lot of people, if you can't feed cattle in this weather, you better go get a new job, because the yards have been dry, the weather's been, you know, pretty moderate. Now we got into that really cold stuff last week, and a lot of people are asking me, well, how'd the cattle handle it? Really fine, because they went into that thing dry and clean and fluffy. You know, they are covered in hair and leather, and they did great. Now we're going to get whacked maybe here the next couple days. It's a little damp in the pens now. If they get wet and they get muddy, that's going to hurt a little bit. The good thing is we're in 2018. We're not back in like November or something like that, where you know you're going to have to battle it all winter.
Give me your price forecast.
I would like to think we'll stay in this 120, 125, maybe going into April when the girls fire up and there's not too much supply yet. Maybe we can edge that past 125 towards 130. I think the summer could be a bloodbath, but we thought that last summer too, and we chewed right through that. So it's going to depend a lot on how many actual numbers are, how much tonnage we put on, and then we got to hope demand stays in there.
I will ask also, there's an inventory report at the end of the month. Is there anything specific you're looking for?
You're going to want to look at the trend to see if we're still building the herd. I really got a question with what's going on in Montana and South Dakota. They're just liquidating cattle like crazy. You see the drought continue in the south, they're going to start liquidating cows too, because it's just like it was in 2012. If there's nothing to feed them, they got to go. And that will have some interesting effects going forward.
Next week, Roy Smith will join us to look at corn and soybean markets. A producer in Virginia won the National Corn Growers Association most recent yield contest by achieving 542 bushels per acre, reportedly a new world record. While it's not uncommon to see contest yields above 300 or 400 bushels, it's probably also not uncommon to ask whether a farmer can do it profitably. That was part of the objective for the University of Nebraska-Lincoln's Testing Ag Performance Solutions, or TAPS, competition. In 2017, teams comprised of UNL researchers, students, and Nebraska producers competed to see which group could grow corn most profitably, most efficiently, and attain the greatest yield. Each team had 3 replicated plots at UNL's West Central Research and Extension Center in North Platte, where they could pick their own variety, seeding rate, irrigation, and nitrogen applications. But they were also in charge of marketing and selecting crop insurance levels. 8 farms were profitable, 7 weren't. Nebraska Extension's Daran Rudnick, Chuck Burr, Matt Stockton, and Rodrigo Worley developed the program, Daran joined us this week to explain why the group thought the TAPS competition would be valuable.
So TAPS started in December of 2016. Matt Stockton, the Ag Economist at West Central Research and Extension Center, him and I were visiting about the best ways to really connect to our producers and how do we get people to come in together so that there's a better peer-to-peer learning opportunity in addition to how the university and maybe some industry partners could come in. So we kind of brainstormed some ideas and one thing led to another, and then the idea was to get everybody together. Competition felt like that was the most appropriate means of doing that. So,
outline for me how the competition works.
Yes, so the competition, it starts with, we have a website that basically is a password protected login for every individual farm. So the idea was we wanted producers to be able to make a series of management decisions that were very realistic to what an actual operation would look like. And through that process, they would go and they would actually go in, log in, and then they would select like their insurance, they would select their irrigation, so both they would have to select their date as well as the timing or the amount, their nitrogen fertilizer, their seed population, and then their hybrid. And then basically through that process, we would take that information and then we would actually go ahead and implement those in the field.
So tell me, for an example, which situation was most profitable and why?
We had 3 awards. One was the highest award was most profitable, and then we had a highest input use efficiency and greatest grain yield. The most profitable farm, it was very interesting to look at kind of the differences between the biophysical data that was collected and then the agronomics or the yield response versus how it played out in terms of profitability. We saw that one of the biggest drivers of profitability, as one could imagine, was the marketing and how well that they did about handling throughout the growing season and their commodity prices. So.
And the most profitable farm, one of the reasons it was most profitable was because of the marketing, yeah?
That is correct.
Okay, yes. What about the inputs? What did you learn about how input use can affect profitability?
So the inputs, it was very interesting. So we had a very large spread. So in terms of irrigation, we had one farm that irrigated as low as 2.5 inches for the season up to almost 11 inches in the season. And we had about a 100-pound difference in nitrogen fertilizer from 150 to 240 pounds per acre. Those definitely had an input or impact on terms of the input cost. But again, the marketing was really driven pretty heavily by the profitability was really driven by the marketing. But the efficiency was driven by how well they irrigated and fertilized.
The highest yielding field was profitable, correct?
So in this case, our highest yielding field for our producer, he did not have a very aggressive marketing strategy. So even though he had the highest yield, he actually resulted in one of the lower farms in terms of profitability, in terms of a positive profit. So,
what did the farmers learn from this, do you think?
So I think there was lots of opportunities to learn both in terms of the management decisions and what information people were using to make those decisions. So there was a lot of technology that was available to producers, including soil moisture monitoring devices, aerial imagery. We also had lab analysis that were collected, so soil samples that were submitted and posted online. So it was interesting to see what technologies some producers used, and they've shared that information briefly, but a lot of that information will continue to come out as we generate our final report.
UNL had a team as well, which we were a part of.
Yes.
Did you make your decisions based on what Nebraska Extension recommends for?
Yes. So we wanted to provide confidence in the UNL recommendations that are generated by us at the West Central Research and Extension Center, as well as our colleagues on main campus. And so when we did that, we wanted to make sure that our irrigating, our nitrogen, and then our seed selection and population density were all appropriate based off of the recommendations that we give our local growers.
And you were profitable?
And we were profitable, yes.
So what's the idea for next year? Are there any changes or additions, things that you'll do differently?
Yes, so there was tremendous interest in the program. So we've had a lot of producers as well as different entities that were interested in how things played out, and it was very eye-opening. So with that interest, we do expect to expand the competition to have more growers involved. We have talked about having now not only a center pivot irrigated competition, but also a subsurface drip irrigation competition. We're still finalizing some of the details in terms of the addition of maybe another management decision such as insecticide application. And we're going to iron those out and release that information in the next couple of weeks.
You can find the full contest results from the 2017 TAPS Farm Management Competition at taps.unl.edu. That website will also host registration for 2018's contest in the next few weeks. In our previous episode of Market Journal, Tina Barrett from Nebraska Farm Business Inc. explained how recently passed tax legislation could impact farmers and ranchers. This week, Tina further explains what producers need to know about the elimination of Section 1031 exchanges for personal property. Tina says one might assume a 1031 exchange is done only when trading land, but can also apply to machinery or other equipment.
You know, we hear Section or 1031 exchanges all the time in regards to land exchanges. But anytime we were also trading a piece of equipment, you were doing a 1031 exchange. We just didn't realize we were doing it. And so the new tax law has eliminated the 1031 exchange for personal property, which means we can still do it on real estate, no change there. Okay. But what's going to happen is when you go to trade that tractor or a combine or anything else, in the past, if you had a $200,000 tractor that you were buying and you had one worth $150,000 that you were traded in, you write a $50,000 check and we're done. And that $50,000 is what we put on the depreciation schedule. So what we're going to need to do now is take a look at that $150,000 tractor that you traded in as a sale. And so we have a sale that we need to recognize the gain. Because we've had so much depreciation allowance in the last few years, very little equipment has any depreciable basis left. So we're likely looking at a $150,000 gain on the tax return. That's ordinary income, but we're going to have to recognize it in the year of that trade. As a trade-off to this elimination, they basically have given us unlimited depreciation. So we can take that $200,000 purchase and depreciate that as much as we want. So we can completely offset that $150,000 gain. So from a federal standpoint, not too bad. In fact, that depreciations for like a Schedule F is going to offset self-employment taxes. So we could end up even with a tax savings as a result because we're going to have more deductions on Schedule F and then ordinary income on 4797. So maybe not okay.
You said on a federal level okay, but on a state level?
So the state level, there's some things that are happening as a result of this that maybe were unintended consequences. Some states like Iowa do not follow the federal rules on depreciation. So you maybe can take $150,000 depreciation on the federal to offset your gain, but Iowa's going to limit you to $25,000. So we have issues in some states like that. Some states like Nebraska, where we do follow on depreciation, that's not going to affect our income tax return, but we've been putting on personal property the federal depreciable basis, which was the $50,000 trade difference. Now we're going to have a $200,000 tractor. So we're expecting to see an increase in personal property taxes paid as a result of that in Nebraska.
Meaning that producers should do something differently? How do you use this information?
I'm not sure that there's anything that they can do differently unless they want to see if they can get some sort of law change, but it's more of a planning factor of knowing that probably what's due in 2019 could actually be higher. Should they change the way they keep records? So I think that's probably the biggest thing that we need to think about now is the fact that as you're doing your record keeping for 2018, we need to know what that purchase price was and what that trade-in value was, where in the past we've only asked for the difference. And so that's a little something, either making sure that you're bringing those trade documents to your tax appointment next fall, or getting that information just inputted right into your records would be an important step. You can learn more about the elimination of Section 1031 for personal property by reading Tina's recent Crop Watch article. We'll link to that on the Market Journal website. Nebraska Extension's Berger says breeding costs can be the fourth largest expense for many cow-calf farmers or ranchers. Writing for UNL's December Beef Watch newsletter, Aaron said knowing the cost of natural service, artificial insemination, or a combination of the two can help producers gain insight into their operations' profitability. We talked with Aaron recently and asked him to explain how costly breeding can be.
So when I look at breeding expense and we break it down on a budget basis, typically I see breeding costs running somewhere between $40 to $100 per cow per year. It really varies depending on the operation and what they're doing, but that would be kind of a ballpark number in terms of a range.
What factors into that?
So really there's some number of different factors that come into breeding costs. First, of course, if you're using a bull, is the cost of purchasing that bull, and then also subtracting off what his salvage value is. With that would be number of years of service, how long are we using him? And then bull to cow ratio is really a pretty important one. It's really interesting start to do some math with that. If you're on a 1 to 20 or 1 to 25 versus a 1 to 30 or 1 to 35 or 40, that really can impact breeding cost.
Why is that ratio so important? Explain that further.
So that ratio is so important just in terms of looking at total expense for that bull and then comparing it back to cost per cow. And of course, if we can use a bull for more cows, we just are reducing the cost per cow, and that can really be significant. If we move from, say, 25 cows per bull to 35, we can decrease costs by almost 30%. And so that can be significant from a breeding cost standpoint. Now, we got to realize that depending on the age of the bull and how we use him, we might vary our bull to cow ratio. A younger bull, we would maybe be 1 to 20, 1 to 25. A bull that's more experienced and a little older, maybe 1 to 30, 1 to 35.
You also mentioned 4 years is what you're factoring in for use here. How flexible can that be? Should there be a clock on it? Should you put 4 years into your cost analysis?
So I think that really varies with the individual and with the herd. Some folks would say they automatically cull a bull once he's been part of their program for 4 years, especially if they're keeping replacement heifers. They often have those coming into production. I've seen some other situations where people try to get 5 or 6 years out of a bull. Depending on their scenario, they can make that work. Again, this cost per cow basis, the longer we can effectively use a bull, the greater opportunity we have to reduce cost per cow.
How do these costs compare to artificial insemination?
So that's really a good question, and we have a nice tool at the beef.unl.edu website. It's called the Breeding Cost Calculator. Allows producers to go in and compare artificial insemination to natural service. The thing I really like about this tool is it includes all costs, and so we can really accurately compare, in my mind, the cost of utilizing artificial insemination, maybe with a cleanup bull, to just natural service. We also have the opportunity to look at what's the added value of using something like artificial insemination and really try to compare those two options to one another in a way that's fair and just to both.
I want to ask, is cost the only factor you should be using to decide whether or not to switch from a bull to AI?
No, I don't think cost is the only factor. Obviously, it's the value you create from the progeny that are produced. When we utilize something like AI, we have the opportunity to utilize things like estrus synchronization that can help us have cows calve earlier in the calving season. Cows that calve earlier tend to have heavier calves. Also, when utilizing AI, we can use the very best genetics there are. And so that can provide some additional value as well. So it's not just the cost side that goes into this, but also what's the value created by the progeny we get from either utilizing artificial insemination or natural service with a bull.
You can find the breeding cost calculator as well as Nebraska Extension's schedule of meetings regarding beef production at beef.unl.edu. The January Nebraska farmer says sorghum yields of 200 bushels per acre aren't out of reach, but finding entire fields averaging 200 bushels are rare in the state. This month's issue says Tom Hartman hit that milestone when he harvested one of his fields near Grand Island for the National Sorghum Producers Yield Contest. You can read about some of his strategies for reaching that milestone in the January Nebraska Farmer. And now with this week's weather forecast, here's Nebraska Extension Ag Climatologist Al Dutcher.
Well, folks, here we again for the weekly forecast. Last week we mentioned the potential for a snowstorm in the Central Plains has moved to the second half of the week. Looks like that come to fruition. Thankfully, we haven't seen significant snowfall, but we had moderate accumulations across eastern Nebraska, lesser totals across western Nebraska. The real issue was the amount of wind that we dealt with the blowing and drifting, and the quick changeover from rain to snow, which basically iced up streets. So we're going to have to deal with this cold weather for a few days after a brief respite with these warmer temperatures earlier in the week, which ended almost a 3-week stretch of below normal temperatures and sub 32-degree temperatures in eastern Nebraska. Unfortunately, as we go forward in time, we're going to have to deal with cool conditions at least through the middle of next week before we start to look at another storm system coming in the western United States that is likely to increase the warm advection from our south into our region and bring us back to above normal temperatures, at least temporarily, as we go through the third full week of the month. So let's go to the upper air models and see what we have in store as we go through this next 7-day period. I'll draw your attention to this upper air trough. This is intensified as a system went to the east of us, giving another large system to the northeastern United States. We will have high pressure in the surface working its way southward, reinforcing the cold air that came in with our snow. You'll look at an absence of snowfall here. Basically, if you see white, we're looking at 2 inches or more of snowfall. We do have a jet streak over top of us the next couple days, and that means that we could see some flurry activity, especially Sunday night as we have some weak low pressure at the surface. But again, it looks like totals are going to be less than an inch. and most of it will be a non-event, precipitation free for most of the central part of the country. Now, as we get into Monday, we start to see this ridge moving into our region, so warmer conditions start to develop in western Nebraska. It's going to take an extra day for it to reach eastern Nebraska, as high pressure is firmly in control across the northern plains. Precipitation, most of it in the Pacific Northwest and exiting out on to the eastern seaboard. High pressure moves in fully into the central plains as we go into Tuesday. That's probably going to be our warmest day. We do show low pressure trying to develop, but primarily high pressure is firmly in control. Very weak lift to our south. No moisture being evected northward. Most of the heavy precipitation on the western seaboard. And then on Wednesday we start to see the jet trying to flatten out somewhat as we get a big pulse of energy coming to California. We'd expect some more mudslide issues there. Not much in the way of moisture here, but some milder temperatures. We may actually breach the 32-degree mark in some locations. And again, you see the heavy precipitation concentrated in the Pacific Northwest. On Thursday, we see that sag a little bit farther southward, so more central southern California will be in the rain shield. We do show low pressure at the surface in eastern South Dakota, but that itself looks like it's going to be a non-event for precipitation. The main shield starts to make its way into the northern Rockies, and as we get into Friday, the jet stream starts to dip, and we'll need to watch this closely to see if that'll exit a storm system into our region as we go into late in the week and the following week. We do show low pressure at the surface, but again, moisture is limiting as it lays back in the Rocky Mountains. Most of the moisture that is anticipated in our region will not come until late in the weekend and the following week, as we have an aggressive storm pattern set up for most of the United States. So the 8 to 14 day forecast indicates above normal temperatures east of the Rocky Mountains. I think this is probably overplayed somewhat. We might see a little bit cooler conditions across the northern plains. In terms of precipitation, widespread above normal chances for precipitation, with the heaviest being in northern California and the eastern Corn Belt.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on cattle markets, UNL's TAPS competition, 1031 exchanges for personal property, and breeding costs. As always, you can keep up with Market Journal during the week by following us on Twitter, Instagram, and Facebook. Next week, Roy Smith will be our market analyst. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska Lincoln's Institute of Agriculture and Natural Resources.